Incorporated was formed on July 1st, 2019 when W purchased the company. W paid $450,000 cash for company. At the time, company's balance sheet reported assets of $470,000 and liabilities of $300,000. The fair value of the assets estimated at $540,000. Included in the assets is the company's trade name, fair value of $70,000, copyright on some tour boats with a fair value of $40,000. The trade name has a remaining life of 10 years and can be renewed at nominal cost indefinitely. The copyright has a remaining life of 20 years. So we're going to prepare the intangible assets section of Incorporated as of December 31st, 2019. We're going to calculate the amortization expense for the year ended December 31st. So here's Schedule 1, computation of fair value copyright. Schedule 2, goodwill measurement. Schedule 3, computation of the value of the trade name. And then we'll create the intangible section of the balance sheet and create this journal entry. So let's start with Schedule 1, cost of copyright at date of purchase $40,000. And we have to minus the amortization of the copyright for 2019. So we have the formula here for that amortization. 40,000 divided by 20 years times 6 divided by half of the year, $1,000. So the carrying value of the copyright on December 31st, 2019 is $39,000. Next question, Schedule 2, goodwill measurement. The purchase price of the goodwill for $450,000. We know that the fair value of the assets was $540,000, and the fair value of the liabilities $300,000. So if we minus the assets from the liabilities, the net value of the fair value of the net assets $240,000. So we minus the purchase price with the fair value of the net assets, we get the value signed to $210,000. Next, the computation of value of trade name. So the purchase price was $70,000. The amortization of the trade name, there is no amortization, so there would be 0. So we have trade name, total intangibles, $319,000. The journal entry, so this produces the amortization expense and accumulated amortization of the copyright. So amortization is $2,000, so we'll debit the expense and then credit the accumulated amortization. So impairment. Calculate impairment of the trade name. Most likely it's going to be the fair value of the trade name. The trade name fair value $60,000. Is there a loss on amortization? Impairment is essentially like the value of the asset compared to the fair value of it. As in, like, there's like the purchase price, and then there's like the book value, and then there's like the fair value, the market value. So if the book value is actually higher than what the market says it should be, then there's going to be an impairment. As in, like, it's actually worth less than what you bought it for. The market says it's actually worth less, or the market says it's worth more, so there won't be a loss. So, like, because there, because the carrying value, face value, the fair value is higher than the market value, there is in fact a loss on impairment. Of carrying value 70,000 and the fair value of trade name 16,000, so the loss on impairment is 4,000. So yes, there is a loss. Copyright purchase price 4,000, and there is actually going to be a amortization. Let's see. Amortization of the copyright. So I believe it's probably for 2019. We'll just say it's amortization for copyright 2019. The amortization was 3,000. So carrying value of the copyright is 37,000, and so we have to minus that cash, expected cash flow from the copyright 26,000, 11,000. So is there impairment? Yes. Carrying amount of the copyright 37,000. So the fair value of the asset, let's see, 40,000. So loss and impairment. Goodwill, yes. So now we can write the journal entry for the impairment. Loss and impairment. Trade names, copyright, goodwill. The trade name, the loss and impairment for trade names. The loss on copyright is 23,000, and the goodwill, the loss on goodwill is 45,000. Total loss of impairment 152,000. Okay, pretty easy. Let's just check real quick, see if it's actually accumulated. Oh, whoops! It's actually not. It's less accumulated amortization. Okay, so let's do the next part where we prepare the schedule for the individual costs of this land, like the cost of the land as well as the cost of the building. Like when there's like a partnership or a company purchase, or a person purchases a company, then like the assets that are like coming into the company. Well, first there's like the purchase price of those assets, but whenever some kind of acquisition of assets happen, those assets need to be evaluated based off of the market value, the fair value. And so, for example, one of these examples could be like land. So, like, if land or buildings are added to the balance sheet, added to the books, pretty much you won't only just calculate it based off the purchase price, but rather you would also add in various things such as like acquisition costs, etc. So like for this land particular, you have first off the cost of the land. Okay. And then, for example, you have payment for the commission. You have legal fees. Title insurance. And, of course, the removal of the old building. You can see the building was raised. The cost of the building. The cost to raise that building after the acquisition. So you have the cost of the land. So the land was purchased with that building at $600,000. The commission for that was $48,000. The legal fees $6,000. Title insurance is $18,000. And then the cost to raise that building after acquisition is $56,000. Total cost of land $720,000. Now we're going to calculate the interest of the calculation of the capitalized interest, weighted average cumulative expenditure. As you can see, 2020. The weighted average amounts of accumulated expenditures. They give you those figures. You just enter those in. They can, 1,800,000 for 2020, 2021. 2,400,000 at the interest rate of 10%. So you could calculate that pretty easily to get the interest for the year. Let's see. And then for the actual interest, because the thing is, it wasn't actually a full year. If you guys take a closer look at, there's only certain amounts of the year itself. Because the loan was actually taken out on March, so like for that year, full 12 months aren't going to be included. It's actually going to be 10 months. So for 2021, 4 million. Starting March 1st. So what that means is that there's 10 installment payments, but the financing was taken out on March 1st, 2020. So the principal has not changed. There hasn't been any payments made for that entire year. Starting 2021, well, you'll have that principal not change till March when the first payment's made. That first annual installment payment starts on March 1st, 2021, so the first installment payment is going to be $400,000. So starting from March 1st, the principal is now $3,600,000. Okay. 10% interest for that year because the loan was taken out on the 10th of the month. Taken out on the 3rd of the month, so March 1st. So it's annuity due. So let's see, 10 months. So how many? So the fraction would be 0.8333. 2 months. 1.166 and 10 months. So the interest that would be paid would be the actual interest. And we'll get the sum of that to get 700,000. Okay. So now we can calculate the cost of the building, additional costs, the construction costs of the buildings, you guys can see here. Well, there's a fixed price on the contract, the $4 million. Okay. And then plans and specifications, blueprints, architecture fees, and the interest. Capitalized. So the plan specified for blueprints 20,000, 80,000, interest capitalized 38,000, 240,000. So the cost of building is going to be $4,524,000.